Once again, I am muted. We started in I guess every point I made was a mute point. Um, Welcome to this week, everybody. And boy, what a week it has been. And welcome, of course. Welcome to the long weekend. Hopefully, you guys are going to have a some fantastic time. So the market's closed tomorrow, so we don't have to worry about that. So we'll have a four day trading week this week coming up. We of course do have a market close on Wednesday, right in the middle, and as I said, we will have a opportunity. We'll have an opportunity to good. Jonathan just said mute point, so I know that you can hear me now. We'll have an opportunity to win a Friday market close. That would be awesome. Now, why videos? Says that I have been making the bar too low, making it too easy. So normally I ask for three supers to do it. We're going to do four. Let's go with four. Why not? So if any time today, before the end of this show, we get four supers, any type of super. We'll do a Friday. So that's what we'll do. Anyway, want to quickly point out to Blossom. You'll see up there above the bull's head. Blossom is that social media app that is designed for us, for investors. It's really fantastic over there. They are looking at doing another tour this summer. Now, unfortunately, those of us who have been hoping for Ottawa, I seen the initial list and Ottawa wasn't on it. It looks like they're going to do the same four cities. So Vancouver, Calgary, Toronto, Montreal, and then two U.S. cities, I believe New York and Los Angeles. So that's the way it's looking right now. So I may have to get my butt down to Montreal if we're going to do it that way, because I definitely would like to attend this summer. So going to work on that for sure. Anyway, those of you who have not yet heard of Blossom, it is a social media app. You can link you can actually link, well, it depends. In Canada, if you have, I believe, Questrade or Wealthsimple, those ones you can link. If you're anywhere else, like with my National Bank stuff, I have to manually enter that myself. And you don't have to do it if you don't want to, but it's kind of cool. Anyway, check it out. There's a link down below to head on over. Give me a follow when you get there, because I'd love to follow you back. All the awesome stuff. So we got some great news today as well. Before we get to news, and before we jump into the chat, because I can see you guys exploding the chat, let's talk about Daniel Prong. Did you guys see what happened to poor Daniel on the weekend? Now, he is also a Blossom ambassador over at Blossom as well. But yeah, what I heard is that he got himself a sponsorship package that he had downloaded, and unfortunately, the crypto scammers stole his account. So if you follow Daniel, you probably saw a fake Michael Saylor. Well, it's a real actual meeting. Like, they take a bunch of Michael Saylor stuff, they put it in, and then they basically try to scam you out of some Bitcoin. Luckily, he did get his account back, and then I think he still has. I think his name still says MicroStrategy, because it takes a little bit longer to do that. But that's going around. Interestingly enough, during the week, I received, I think, something from some person trying to give me a sponsorship. And I looked at it and I was a little hesitant. And Safari actually came up and said, "This looks dangerous." And so I'm like, yeah, I think it does. Now, I did just do a little due diligence. I took the person's email address, the company name, and it did come up to a web page. But they're crafty. They could have easily built that. So I backed away. And I'm really glad I did. Otherwise, you could have been watching Michael Saylor on this channel on the weekend. So yeah, I'm really, really glad that did not happen. All right, holy banana bread. The chat is absolutely crazy. Let's get in there. Let's say hi. Starting off with Jonathan. Am I early? Yes, but there's nothing wrong with being early, because the early bird gets the worm. Prairie's in the house. Good day and happy Sunday to all in the community. Absolutely. We got good vibes. Hello, good vibes. We got Jonathan, love a Friday close. Well, the opportunity is there, so hopefully that'll happen. Um, and yes, muted sound check. I did it again. Started off with a mute, but here's the thing. Yes, I pulled pulling a high rye. That's what it's called. I at least saw the second the first mute showed up in the chat. I saw it, and I'm like, uh oh. And here's the funny thing: before the stream even began, I looked at my mic, and it was flashing, which is meaning that it's mute. So I hit it to turn it back on, and did not realize it went back into a mute situation. So what can we do? And yes, the mute point. I had to do it. I had to do it. The humor. Gotta have some humor in there. We got Mary in the house. Hello, Mary. Whenever I see Mary, I always remember Mary's always gonna later in the stream. Mary's gonna tell you guys to hit the like button. I'm gonna tell you to hit the like button right now. Let's just hit the thing, turn it blue. Let's absolutely shake down. Not shake down, but shake up YouTube. Let's let them know we're here. We got Bonnie in the house with a hello, Candace in chat. Hello, Bonnie. How are you? Hope you're having a fantastic long weekend. Alan is in the house with an afternoon. Oh, and we've got Enid. Enid is in the house. Good afternoon, everyone, says the lovely Enid. Oh, we got Terry in the house. Good to be here and with you all, my friends. Good to see you, Terry. Glad that you're here. Jordan. Well, it's officially AC season. Stay cool, you all. 31C today. Yeah, we've actually got humidity for, I think, today and the next couple of days, at least maybe 2 or 3 days more. It'll be in the 30s. So that's going to be fun. Welcome to summer. It's here. Let me know what it's like where you guys are. Is it just Ontario right now in the heat? Or, is everybody else in the heat too? I'm kind of curious. Bleak is in the house with a hey. Hello, Bleak. Always good to see you. Good call. Very well. And hit the like button. Yeah, absolutely. Hit the like button. Let's turn it blue. Let's have some fun. Vic Vin is in with an hola. And we got from Vic Vin to Vic. Whoa, roads are slick out there. Where is it raining? I hope it's rain. Vic. Please tell me it's rain. It's 19 degrees Celsius in Surrey, BC. And the nice thing is, one of the things I used to love about BC is, well, not interior BC, but coast BC. You really didn't get those humidities. You got hot, but luckily less humid kind of thing. It's the same thing. It's actually the same thing in, you don't really get humidity in like Alberta. Alberta, I found it was just a very hot heat. But once you get east, and once you get closer to them Great Lakes and get closer to the Atlantic Ocean, humidity becomes a big thing. Mr. D says Northern Alberta, 7C and raining. Holy banana bread. But okay, if you need it though, actually anything in the West, the more rain you guys can get, the better. And not that I want floods or anything like that. I just don't want, I just want to keep them wildfires under control this year if we can. So maybe nature can give us an assist. That would be awesome. All right. Vic is mentioning Oilers. Yeah, look at that. It is they're going into game 7, so they're like 3-3. Holy cow. Who do you think's going to win? Is it going to be Edmonton? Is it going to be Vancouver? Let me know. Let's see what everybody's consensus is here. Now, I will tell you, I'm kind of leaning for Edmonton. It's just because I don't know. I've always found Vancouver a tiny bit annoying, but either way, whichever one wins, I will cheer for them. So, but between the two of them, I think Oilers edges out Vancouver just a little bit. Jonathan says 9 degrees Celsius in Halifax. Bring that summer over here. Oh yeah, absolutely. That's not too much of a warm day. All right. Prairie says sunny and 21 in Winnipeg. And Terry's back. Smash the like button. All right, Terry, you're like you're on a like button crusade today. That's fantastic. That is fantastic. And Vic is anyone but the Leafs. I'm not a fan of the Leafs personally. But that's because I come from coming from Halifax. We used to, like in Halifax, we used to have the farm team for the Montreal Canadiens way back in the day. And so I think there's just so many Montreal fans there because of it. So, plus the fact that my dad was a Boston fan, and the worst thing I could do, rebellious wise, was to be a Habs fan. So I was like, yeah, let's do it. All right. Prairie says only day this long weekend, rain yesterday and tomorrow. Oh dear. Oh dear. We got Jay in the house. Jay, welcome to the show. And we have Vic. May long weekend usually rains. Well, there we go. There we go. So yeah, a good old May long weekend. And it's funny, I almost forgot it was a long weekend. It really wasn't until I think Friday that I realized, oh yeah, it's Victoria Day is coming up. This month has been moving really, really fast. So, but the summer's here. The summer's here. What can we do? All right. What we can do, I'm going to have a cup of coffee or have a sip of my good old Starbucks, and then we will head into our first story of the day. Oh, very good. Okay. Let me pull up the graphic for you all. All right. Inflation American style. So, holy cow, what a week did we have? I mean, we started with the PPI. Now, the PPI, so that's the Producer's Price Index. It generally tells you whether we're getting inflation at the wholesaler level. And yeah, we got some. So the PPI, they were expecting it to come in at 0.3%, and it came in at 0.5%. So it came in hot. And core PPI, because they do the same thing as the CPI, but core PPI, they were expecting 0.2, and that came in at 0.4. So that, of course, is if you remove like energy, energy and food from it. So that's fantastic. It's not fantastic, but it was kind of interesting. Now the market. So the market reacted to this a little bit, just a little. We got a little bit of red from it. More flatness than anything else. I think it was more or less the market collectively took a breath and's like, uh-oh, what does this mean for CPI? So these numbers, as I said, they were not great. And it was really looking like inflation was going to come in hot on that CPI. This looked like it was going to be a pretty bad omen when it came to the inflation numbers coming out on the US. And I'll tell you, on the Tuesday before we got the CPI, I was looking at a few things I wanted to buy, and I was like, you know what? This looks bad. This looks bad. I think I'm going to hold off. Well, I'm still waiting now because the CPI came out on Wednesday, and to everyone's surprise, it actually came in a little softer. So we were expecting a 0.4% on the CPI, and we got 0.3%. So that was enough to make everybody happy. Core CPI, we were expecting 0.3%, and we got exactly that, 0.3%. So when we actually look at the CPI, it wasn't a bad CPI, but it wasn't a good CPI either. We came in a little bit better than expected, but core was pretty much right exactly what we expected. But the fact that we had a PPI that wasn't so great, this is a fantastic CPI to follow that. The market was absolutely relieved. So that big breath they'd been holding because of the PPI, they let it out, and they let out some dollars as they spent. And we had a nice little green day. Bitcoin reacted really well to the news. It jumped up about $5,000. So that's not too shabby. Now, here's the big thing. We're not out of the woods yet when it comes to the US. So even though we got ourselves this small flicker of hope, I mean, Powell still needs to be, he needs to see more of this. He needs to see back-to-back CPIs coming down before he's even going to consider doing any kind of rate cuts. So if anything, this means that there's still a chance in 2024. Because if this had gone up, the CPI, the chances of a rate cut in 2024 would have been almost none, almost no chance. So that's really fantastic. We actually had a little bit of a better week. So now we have to see what things are going to look like as we move forward. So it's going to be interesting. Let's see. Oh, yes. And next week, the US has their big holiday weekend, the Memorial Weekend. So that's definitely a big holiday in the States. Sort of like their official start to summer in many ways. Jay says, got BMO, BNS, 2 TELUS, and 2 Canadian utilities, and XEI this week. Okay, so Jay was doing a little bit of buying. So Jay was smart. Jay actually probably, I'm thinking Jay bought on the Tuesday when things were down a little. So not too shabby. Vic says, scared to buy at such record days, but sure there are some deals out there. Well, that's the thing. When you look at the market over time, it does always keep going up. Now, when you do, this is one of the dangers of buying it when it's at a record high, is that, if there's a major correction, you might be looking at a month or maybe even in some bad cases, a full year to get back into the green. But you have to look at it too. This is the thing. I always say, what kind of stimulus, what kind of money is in the market? So if you looked at the all-time highs we were getting back at just after the pandemic started, that was from all the supports. So there was so much money pumped into the market. So when we did fall, we fell hard because a lot of that money was coming out as people were, supports were going away and people needed that money, and then inflation popped its way in. So it took us a little bit long. I mean, it took us about a year at least to start getting back towards some of them numbers, and some things have not. Like if you look at the Canadian banking sector, we're nowhere near those all-time highs that we had. So, a lot of it is you kind of have to, and this is what I usually say, is if you have an artificial stimulus that's increasing the market, you almost have to ignore those peaks. Draw a straight line as though, the way it was going, and, and kind of go from there. But yeah, so we'll see how this is going to look. But once again, dollar cost averaging, it is the best way to play the market. All right. Prairie says, I held back from buying this week as well. Same boat. Yep. I mean, I did buy a couple small things, but, that were underneath my average cost base, because that was kind of part of the theme for the next 0 to 100. Now I also did add another stock, but I'll talk, the channel members know what that is, but I'll let the rest of you guys see in the video. So there's going to be a couple of things coming up in that next episode, which is going to be fantastically cool. Vic says, I'm waiting for a sale. Got a pullback. Even Shopify, I bought at $85, dipped to $78. There we go. So yeah, sometimes you have to pull yourself back, see how things are going. All right. Our next news story is, it's about silver. All that is silver. All right. So what can I say? Look at silver. Look at silver go. Now silver, they have soared by more than a quarter this year, outpacing gold. Amazingly, outpacing gold. Wow, who would have thought? And basically, they've made themselves one of the year's best performing major commodities. So, holy cow. Despite that, despite their performance, silver is still pretty cheap. Right now, it takes about 80 ounces of silver to buy a single ounce of gold. So you get 80 times what you get for gold, and that's in that way. Now on Friday, I didn't look at the end of Friday, but towards Friday morning when I was actually scripting this, silver rose. about 3.3%. It got up to 30.55 USD per ounce, which is huge, it's actually the highest it's been since February of 2020. Sorry, 2020. February of 2013. So 2013. Now, normally silver tends to follow what gold is doing. Although this year it has been outperforming, especially lately. And now those of you who've been watching the market close, you can sort of see it's like silver's up 5%, gold's up 1%. Silver's up 5%, gold's up 1%. Same thing, same story over and over again. Now, some of the factors, of course, for this is there's been a lot of central bank buying. There's also been a lot of retail interest in silver in China. That has helped as well. And there's been a resurgence in people they're basically taking bets because of the lower US interest rates, thinking of what's coming. And they're like, okay, let's start hedging things a little bit. Here is a funny thing. This is kind of interesting. So when you look at this increase in silver, it's you're not seeing as much people buying, strangely enough, the silver-backed ETFs. I mean, they're still going up in value, but people aren't really, you're not getting a lot of the volume. But where you're really seeing that volume, and I'm sure a lot of you can probably figure this out, physical silver. People are buying physical silver. And I've heard a lot over on Discord. I've heard you guys talking about it all the time. So that does not really surprise me. Now, here's the interesting thing about silver, and I know Kevin, if he was here, he would go on about this as well. But silver, it's not just used as a hedge. So there's a lot of green technology. So, for example, solar panels require silver, and that's kind of a big thing. And as we get more and more into green technologies, the demand for silver is only going to keep going up. Now, interestingly enough, when we talk about physical silver, not physical silver, but when we talk about physical, silver itself, like I'm talking stockpiles. So the actual stockpiles, now they're tracked by a few different groups. Now, according to the London Bullion Market Association, they say that their silver is down to its second lowest level on record. So that was for April. For the month of April, second lowest stockpile of silver they've ever had. And the interesting thing here is the volumes at exchanges in New York as well as in China, so at Shanghai, they're at lows. They're hitting lows. They're running out of silver. People are buying it so fast. So definitely something you can look at for sure. All right, good old silver. Awesome AI stock ETF you picked. Oh, there we go. Vic has just spoiled it. Yes, I picked up a AI ETF for the challenge, and not let's just spoil the whole thing. It's our first American stock. It's an American ETF. So anyway, we'll see that when we get to that video. But yeah, Enid says, I need a silver ETF, please. Very, very cool. The funny thing is, there is a company. Actually, there's two companies tomorrow in our list video. Well, not tomorrow. The channel members can see it tomorrow. So Enid, you can watch it tomorrow. But there are two silver-related companies coming up on the Tuesday video. So that one, I think you guys are going to love Tuesday's video. I'll tell you. I don't know if you guys have been over to Discord. You probably know the title already, but let me tell you, it's called, the Tuesday video is called 5 Total Return Stocks You Don't Know About. So I did some digging. And I found some insanely awesome stocks that, 4 of the 5 have never even been on the channel before. So I'm like, ooh, look what I found. So that's coming up on Tuesday. All right. Vic says, I had a lousy partner a few years back. They were a real silver digger. Nice, Vic. Nice. See, no one says that. Gold digger. Well, you never know. You never know. I mean, silver has a long way to go, but yeah, absolutely. Ina says, "Where can I buy some physical silver?" I mean, you can buy. There's probably a whole bunch of places you can buy it, but you always want to do your due diligence and make sure that it is a company that others have used. I would ask that question in Discord, and you'll get some good answers. Now, I would always recommend things like like the Canadian Mint. I think you can get silver there. You can get it at Costco, but that's probably not going to be cost effective. Now, Eric is mentioning PMX. There's another one as well. So definitely a lot of different places that you can buy physical silver. Let's see. Vic says, didn't say name. No spoilers. Okay, well, you don't know the name yet. So you'll still have to come to the video to find out who it is. Or Blossom. When I buy these, I update Blossom. So if you have me on Blossom, just take a look at the portfolio and you'll see what it is. That's the fun thing about Blossom. So link down below for those of you who have not yet taken the plunge over to Blossom. Eric says location in Richmond Hill, Ontario. All right, there we go. Whoops, I completely accidentally jumped over Jordan. So Jordan says, do not buy from the Facebook market. Yeah, be careful with things like Facebook Market, Kijiji. These are places where you will get, there's just a higher percentage chance of you getting absolutely scammed. So you kind of want to you want to make sure wherever you're getting it is very, very reputable. All right, now let's, oh, this is always good. All right, Terry says, does anyone talk about dollar cost averaging up? Not joking. All what I see is DCM down. Buying on the way up seems very favorable. I'm curious to hear you always salient insight. Cheers. So dollar cost averaging, it's not that you should be doing it on the way down. You should be doing it all the time. Down, up, sideways. That's kind of the way it works on that market. So when the market is going up and your dollar cost averaging, well, you know what? The stuff you bought 2 weeks ago are going to be lower than the stuff you bought this week. If you're buying, let's say you're buying every week. And if the market keeps staying up, well, you're in great shape because every week, all of the purchases below are less. So you are averaging up. Your average cost base is going, your adjusted cost base, it's going up every week. But that's not a bad thing. And if it does turn around and you do have like a correction or we slip into a bear market for a little bit, then you're technically at that point dollar cost averaging down, which is great as well. Or if it's just going sideways. So that's kind of the thing. What dollar cost averaging is doing across the board is it's putting you at a fair price for that asset, because you should be over a longer period of time. If you plot where you've been buying it, it should pretty much be the average of that account, of that asset. And then you're taking all the guess game out. The guess work out. So, I mean, some people try to time the market. They try to buy the bottom, they miss. Dollar cost averaging, you could easily hit the bottom. You could easily hit the top. You can hit everywhere's in between. And that basically does keep you at a really good spot overall. All right. And Jordan says, I buy from reputable local metal exchanges or TD Precious Metals only. Yeah, absolutely. I do like what Jordan is saying. And that's the whole thing. There are a lot of scams out there. People will, they'll tell you it's silver, or they'll lie, or some people will even just take your money and run type thing. So you just want to make sure that, for something like this, because it's an investment, it's like if, you're walking down the street and somebody says, hey, can I sell you a stock? Well, of course you're not going to buy it. You're going to buy it from a broker. And it's the same thing with this. I always say, make sure they're reputable. If you have not Googled your new silver place or gold or platinum or palladium or whatever you're buying, if you've not Googled them and checked reviews, you're doing it wrong. And I would always say, this is the beautiful thing. Between here so with this community, we've got our Discord. You can go on, you can ask questions about silver, about different places there, get people's feedback. And if you want an even bigger one, guess what? Blossom once again. Whoops, over that way. Blossom once again. An even huger, more huge community. You can certainly go in there and you can post questions, and people will give you tons of feedback. So lots of there's lots of good people out there with lots of great ideas and lots of experience. So that's the thing. Don't make mistakes if you can help it. Learn from other people who've already made those mistakes for you. Prairie says, are you bullish on any of Tuesday's stocks being the next HMM? I'll tell you, there's potential in there. There is potential. So yes, there's a couple, like somebody actually asked me on Blossom if Bird Construction is the next HMM. And they're like, because look at that, you called that one, and now look what's happening to it. And I'm like, okay, yeah, that's true. But there are a few in there that I'm very bullish on. I'm very bullish on some of these. I'm probably going to at least add one of them to the challenge. So, yeah, there's some good stocks in there, Prairie. I think you will enjoy what we have there. All right. Enid says, thanks, Jordan. And then Prairie says, hard to buy when one averages up $4 to $5 per share. I got lucky and bought in at the bottom with GWO and MFC. Yeah, that's always a good thing. But here's the thing, and this is a funny thing. When I first discovered Hammond last year, before nobody was talking about Hammond at that point, and I looked at what they had already done, and a lot of times, and questions, even myself, I had these questions. I'm like, wow, these fundamentals are fantastic. Look at all the growth they've already had. There's no way they can keep that up. But not only did they keep it up, they actually exceeded it in that year. They actually blew my expectations out of the water. So I would say a lot of the ones that we're going to look at tomorrow are similar. Like there is one that we're going to look at tomorrow that their 3-year return on investment is quadruple digits. So yeah, 4 digits. So yeah, we don't see those that often. So there's some crazy stuff in some of these ones that we're going to look at. So definitely put that one on your calendar. You'll definitely want to see that. All right. Terry says, let's say eBay vendors also often charge Canadian customers HST on Canadian Royal Mint bullion. Yeah. So there's the thing. Find a place where you're going to be able to get your, where you can, I think the biggest thing is make sure people in the community have dealt with them. Make sure that you're going to get a good experience and that you're not going to get scammed. That's the big thing. All right. Vic says, I remember the Winnipeg Jets tickets for $6 way back from 7-Eleven. Wow, $6. I don't even know how much it costs to go to a hockey game right now, but I don't even think $6 could get you a drink at the hockey game at nowadays. Jordan says, when buying bullion, there are 2 main things to look for. The piece should weigh 0.01 to 0.9 over the stated weight, and 2 scratches on the corners made by sanding the weight down to par. Sanding the weight down to par. Okay, so there we go. And Jordan's a great person to talk to because I believe, Jordan, you've been investing in physical silver for a long time. So, he knows his stuff for sure. And I believe Jordan is over there on Discord. So, you could always ask some questions there as well if you need more insight from the J-Man. All right. Silver. Now we're going from silver, but we're going to stick with minerals. So critical mineral investment. All right. Let me just remove Jordan here for a second. All right. So Canada and the U.S. As you guys remember, last year came out that the U.S. wanted to invest in Canadian critical minerals as they move away from China. Well, it has finally happened. They're finally doing it. So, Natural Resources Canada and the US Department of Defense, they are putting together a total of, for this initial investment, of $32.5 million. And these are going into Fortune Minerals Limited, which is working on a project with bismuth and cobalt in the Northwest Territories, and Lomoco Metals, which is focusing on graphite project in Quebec. So these are fantastic. Considering, and this is great timing, because also this week, Mr. Joe Biden announced a 25% tariff on Chinese graphite. So interesting that Lomoco basically does have a graphite project in Quebec, and that's one of the ones that's getting the money. So the Canadian government, they're saying that the collaboration with the US will help secure supplies of critical minerals that are needed for the green and digital economy. Now, the US, they basically came out, and the Department of Defense came out and said that its investments align with its national defense industry strategy and show a shared commitment to strengthening North American material supply chains. So, yeah, supply chains, that's exactly what we are looking at when it comes to the US. Either way, this is good for Canada. This is good for these two companies, which is absolutely great. I am liking it. I am liking it a lot. All right. Let's see here. Where were we? Right here. Now, Vic is mentioning, still on the silver. Anyone have physical? Oh, no, this is not. This is stocks. Anyone have physical stock certificates? Nah, it's been a while since, well, it's not that long, I guess. I I would love to have one, just because it would be kind of neat. But now, let me ask this question: anybody who does have physical stock certificates, um, what happened when everything went digital? Are those certificates still valid, or did they just sort of say, "Yeah, you can keep those. They don't mean anything, but here's your electronic copies." Be interesting to know. I do not know, because I got into stocks after things are already electronic. So, that could be a really interesting one. So if anybody has physical stock certificates, let me know how they handle it. How are they handling it? I'm curious to know. If you guys don't have that answer, I'll have to go ask ChatGPT or something. And that's funny. Nine says, I was able to start a new position for 1 penny on Wealthsimple. Ooh, all right. That is interesting. That is it. Going back to, I believe it was on the market close. Nine was mentioning the 1 penny, and I was thinking that you had to at least have $1. But if you could do it for 1 penny, wow, that would be interesting. What was the? I'm curious to know, what new position did you open with 1 penny? that I don't know why, but that's seems to be the pertinent question here right now. Marco says, "Happy Sunday, all. Thoughts on TD's recent news?" Um, ah, let me just let me make sure that I haven't missed any recent news. So for me, the most recent news is all, of course, about our money laundering issues down south of the border. I actually did a video that did feature that. So what I feel about that is I feel it's, they're going to get fined. They're probably going to look at about $2 billion in fine before it's all said and done. And that's probably not going to hurt them that much. Once people start to forget about it, their share price will start to come back up. They will be fine. If anything, right now, if you're a TD fan, it's an opportunity to get some cheaper shares. But yeah, now if there was something new that came out that I missed, Marco, let me know in the comments. Vic says, I'm sure some people have certificates in a safety deposit boxes. Oh, probably. Yeah, when the boomers pass, they ought to come up. Wait, am I a boomer? I don't know. Maybe. No, probably not. Aren't the boomers up around 70-ish or something? Maybe. Trying to think what the youngest boomer is. Maybe just last of the people heading into retirement. Maybe. Vic says almost $1,000 TD shares, and uh, is that like a drop of blood? I'm not sure what you're saying, Vic. I'm not sure what you're saying. All right. I should have just called this a mineral talk because our next our next stories involves minerals of a different kind. Um, Jade. So there's been a little bit of an issue going on in BC with the jade. So BC is now set to end jade mining up in their northwest section of the province, and they're going to have all mining ended within about 5 years for jade. So they're not allowing any new jade mines to open in the Northwest, and they've set a 5-year wind down period for anybody who currently has jade mines open. Now, according to a statement from the Ministry of Energy and Mines, they've been working closely with First Nations to address, they had some concerns about the effects of jade mining on sensitive alpine environments. And this is up in the areas around Dease Lake. And that's roughly 1,750 miles northwest of Vancouver. So it's up there a little bit. So it's just that up in that area. So the order under the Environment and Land Use Act was necessary basically to protect the area from further harm and disturbances. So in addition to environmental harms, the ministry said jade mining has posed significant challenges when it comes to permitting compliance and enforcement in northwestern BC. A lot of these sites, by the way, this is how far up they are. A lot of these sites, you can only access them really by helicopter. So the province said the order is limited to jade mining only. So jade mining in that area only. It does not affect other kinds of mining or jade tenures elsewhere in BC. Considering jade is actually, for BC, jade, I believe they're the provincial stone. So they definitely don't want to cut jade out completely. Let's see. So in 2016, under the BC Liberal government at that time, the Energy and Mines Minister Bill Bennett actually declared May 28th as Jade Day to promote awareness of its economic benefits. So overall, jade is good, but it's just in that one little area. First Nations has some concerns with it impacting the environment, and fair enough. If anybody would know of an impact, I imagine First Nations folks would. They're a little more attuned to the environment, I think, than most of us who are not First Nation. So I respect that big time. All right. Marco says, has the stock priced in all the bad news or more pain ahead? It's a good question. So you could argue that we're talking about TD, that TD has probably priced in a good amount. But I think once we see a lot of the fines drop in the US, we're probably going to get another drop. So I actually thought I thought it could go down a little bit more when that happens. But if it is priced in, it may not. Like, here's the thing. Right now, it's kind of pure speculation. So I would kind of recommend that if you're looking to try to take advantage of the current depression in TD's market, dollar cost average, and then if it does drop a little bit more, yay, you'll get yourself a bit cheaper. But I think the prices that we're at now are going to be fantastic when you look back a couple of years down the road. And let's see, 600. Wow, that's a good amount, Marco. Good amount of shares. Yeah, and the dividends are not too shabby. All right, Prairie Investor. My only exposure to TD is through my position in HCAL. Okay, fair enough. Paul says, you are Gen X if I had to guess, not a boomer. There we go. Vic, he thinks you might be Gen X. Gen X, the forgotten generation. Everybody ignores us. It's like they talk about boomers, and then they talk about millennials, but everybody skips Gen X. It's like, what? And Mary says, do you like H-Bank? Yeah, I have no problem with it. Even so H-Bank and also Bank as well. Even the split core, even when you look at the split core, I mean, it's like they've all done fine. And I have a feeling that a lot of these are going to be going good as we move towards rate cuts and the banks start recovery. It's going to help them right across the board. So yeah, I mean, the only difference between holding physical banks and a lot of these bank ETFs, um, well, with the ETFs, you are paying a fee, but you can also, I mean, depending on your risk level, if you want to, either go with a split core or go with covered call, you certainly have the option of producing some income as well. But a lot of times, especially with covered calls, you are capping a little bit of your upside potential. And I see a lot of upside potential in the future for the banks. Once we get on the other side of rate cuts and this whole mortgage bubble that we got coming at us. Marco is an elder millennial. I don't know if you can put millennial and elder together. It doesn't seem right. But an older millennial. There we go. Abalash says, why is there so much difference in PE between TELUS and Bell? A lot of it has to do with what they're individually doing. So PE, for example, when you're expanding and acquiring and you're pushing into new territory, that will inflate your PE. So that is one thing that's definitely certainly going on. And you got to look at too, TELUS recently, especially with TELUS International, they put a lot that direction, and TELUS has been kind of on a tear that way. So that's part of the reason you start seeing some of these differences. Now, I don't know off the top of my head how big of a difference it is, but we can look at that after we're finished the news. If you want to revisit that, we can actually pull that up at that point. All right. Jordan says, I love being Gen X. We are the forgotten and soon to be in power. Things are going to change drastically when we gain power of the Americas. We're the outdoor kids. We did dangerous things and lived. There we go. There we go. Yeah, absolutely. But also at the same time, when the boomers have had their days are over, hopefully not anytime soon, but then they'll be looking at Gen X as moving into the senior group, and then it'll be like, it'll be interesting. It'll be interesting. Marco says, I mainly write covered calls on CAD banks for yield and income. Everything else is growth. Okay, fair enough. Fair enough. All right. Eric says, any insight on VersaBank? Digital bank located in London, Ontario, no brick and mortar banking locations. Yeah. I mean, so for me, like my bank that I use is EQ Bank. So EQ Bank is this kind of the same general idea. Now I haven't done a lot of, I haven't dug too deep into VersaBank, so I don't want to sort of say too much, but I can say, at least on the EQ Bank side, I've been very bullish with them. I think they've been doing a fantastic job. I would have to look a little bit more harder at VersaBank to give you a fair opinion on them. Marco says, covered calls and dividends in a TFSA is a beauty. Yeah, there's nothing wrong with that. Nothing wrong with tax-free, right? But here's the thing, and I'll put this out there. Depending on what you're looking at. So if you take a look at HYLD, we'll use them for example. So they're holding a lot of US stuff. So all of the US companies that are in their big basket, because they hold a bunch of different ETFs, but all of those US companies, they're all the withholding tax is hitting each of them before that money comes into like HYLD. So technically you are getting hit by a withholding tax. But when you sign up, when you look at the amount that they pay out on their website, or you're still getting that amount. So you're not losing anything, but on the back end you are. So it's just one of them funny things. It's kind of like when you look at VDY versus VOO. So they're pretty much the same ETFs, both Vanguard. But if you're holding VDY in your TFSA, you actually are losing a tiny bit on the back end, because when Vanguard is pulling that money from the US companies, they're losing that 15% on all of that. Now, if you hold VOO, but you put it in your TFSA, you're holding the American ETF, but you get 100%. However, this is something nobody else ever, most people don't mention this. When you put something in your RRSP to avoid a 15% holding tax, you have effectively created a situation where the entire thing is now taxable. because once you pull it all out of your TFSA after you retire, or or if you're doing a meltdown, you're going to pay tax on it. So you will pay tax. There's no way around it. You're just sort of hiding. It's like you're sweeping the tax under the rug for now. It's like, let's just sweep all that tax under the rug. We'll deal with it later. So that's kind of what you're doing there. Just something to keep in mind. So Marco Z says, just Canadian stocks in my TFSA, so no withholding tax. Yes, but if you're holding a Canadian ETF that is holding American companies, so let's just say I'll give you an example. So let's say we have an American company called, we'll just call it USA.com, and they've got a 10% dividend. So if you created a company up here in Canada, so we'll call it a USA.com ETF, the Canadian one, and you're buying that American ETF, well, that 10% dividend, they're going to take 15% of that when it gets paid to the company that's managing that ETF. So when that ETF is determining whether they're writing covered calls on it or not, when they're determining how much they're going to pay you, that comes, they have that 15% less that they're receiving. So, you're going to lose a little bit on that, but it doesn't come out of, if they say, let's say after their covered calls, they're saying that we're going to give you 15% yield, you're still getting your 15% yield. So that doesn't affect you there. It's not like you actually see a subtraction from your money, but it happens behind the scenes. So it happens to the company before the company sets the values that they're going to give you. Just something to keep in mind. So you can't say that there's none. If you have a TFSA and you're holding an ETF that only is holding Canadian companies, so like, let's say a Canadian Big Six banking ETF or something like that, then no worries at all. So just something to keep in mind. A lot of people sort of lose sight of that a little bit, or it's not that you lose sight of it. To me, I always look at it this way. I don't care that's happening. Because when I look at like HYLD, if I'm going to hold it, I'll look at their yield and I'm going to base it on their yield. I'm going to base it on on the returns that ETF is coming back with. If those numbers are fine with me, why do I care that on the back end, that U.S. companies, that the IRS is taking 15% of the money that's coming in to, in this case, Hamilton, and that means Hamilton can't give as much. So, instead of, maybe if that didn't happen, Hamilton could, instead of, let's say, I don't know what the dividend yield on that one is, but let's say it was 14%. Maybe they could give 14.5% if that wasn't happening. To me, I don't care. I always look at what it is I am getting. And if I'm happy with that number, I'm not going to complain about stuff that's happening on the back end. You can min-max everything if you really want to, but I always say, look at the numbers. If you're happy with the numbers, there's nothing wrong with that. All right. Okay. Oh, Marco, you do your own covered calls, no ETFs. Okay. Fair enough. Hopefully that's working well for you. Marco, did you find that, when you started to write your first covered calls, did you find that there was a pretty steep learning curve for you, or were you maybe perhaps more of a natural going in? And let's see. Marco says, I only hold US stocks in my RRSP and in USD, skirt all the withholding. Yeah, exactly. But once again, you will pay a 100% tax on that when you do pull it out of your RRSP. So it's kind of that one thing. Because I look at it this way. If you think about it, if you put something in your RRSP, to avoid 15% tax on the dividend, you are now going to get taxed on everything. But keep in mind, when you put it in your RRSP as well, you can defer that tax. So you do have that write-off so that you're paying that taxes later. So you're still moving taxes around. It's fun. And yeah, exactly. So Marco says, as long as it's coming out at a lower rate, because that's a general idea, right? You want to put money into your RRSP when you're trying to lower that tax percentage. So you're paying less taxes. And then of course, when you retire and you're pulling it out, it should be at a lower tax rate. Your marginal rate should be much, much lower at that point in time. All right. Terry says, listening to Jeff Rubin's recent promotions of his recent book, A Map of the New Normal, Interest rates are not going down. In fact, Ruben says high interest rates are here to stay and likely climbing. Interesting. It's an interesting thing. Right now, I know that the Bank of Canada, for example, their end goal is to get it down to, around 3%. Um, I don't know if I would agree. I have a hard time agreeing. I think right now, um, maybe over a longer time frame, because you kind of have to look at it like gas, right? So you start off at price A, and then gas goes really high, and then you pull it down a little bit, and people get used to it, and they're like, "Oh my god, this is great. We're getting such cheap gas." When if you look at it from before that whole event, they're actually paying more. And then you could do the whole thing over again and take it up really, really high and just pull it back. So you could conceivably be doing that with interest rates. One thing that especially, I guess, in the US. One thing is, even with the high interest rates, they seem to still be doing okay on a financial level, on a GDP level as well. So we'll have to sort of see. And they'll have to play that, of course, by ear with the way the economy works. They're definitely going to have to pull the rates back initially. Maybe down the road, they might then slowly start creeping them up and kind of do like a slow creep. But, as people sort of get used to them. Because, yeah, years and years ago, if you go back to like the 70s or the 80s, tax rates were, the interest rates was much, much higher. All right. Okay. Fair enough. Marco says, I find Canadian options have a bigger bid-ask spread, so I usually do a minimum of 2 to 3 contracts at a time. All right. But the big 6 banks have decent option volume. So the market, it's pretty liquid. Not much else for Canadian stocks. And options are bigger in the USA, so the market here is pretty small. Yeah, well, that's the thing. With the USA, you have much higher volumes. So when you're looking at things like, for example, options, or if you're looking at day trading, or if you're looking at swing trading, US stocks can, you can have a lot more options. It's just one of these things that you kind of have to keep in mind when you're looking at the overall, the whole overall pattern of everything. And interestingly enough, the channel members, we actually talked about that Thursday night in the channel member live stream, as we're talking about US versus Canadian. And we did bring up that point. We brought up that point. Now, we didn't specifically talk about options, but we're talking mostly about day and swing trading. Ian says, I'm going to have to catch the replay. I'm at a car show. Enter the limbo competition. If I win, I will get it on Discord. Oh my gosh. Like when you say the limbo, you mean like the limba, like you have to sort of do the weird dance thing under a pole. Oh gosh, you got to get, even if you lose, you should put that on Discord. That would be funny. I would watch. I would definitely watch for sure. Holy banana bread. All right. Whew, let's have a drink and then we'll get to our next news story. Oh, fantastic. All right. And just before we get to the next news story, let's just answer this. Marco says, it will be interesting to see if businesses start to move to the USA with the new higher capital gain tax. That's going to be interesting to see how that all rolls out. And I was watching a snippet of Poilievre the other day, and he sort of mentioned that he doesn't see it happening. He doesn't actually see it happening. Even though they put it in the budget, they've yet to put a bill in. And it still has to go through Parliament to be able to do that. So we'll have to see if, Poilievre seems to think that the Liberals might actually back off on it. So it'll be interesting to see. Now, Trudeau will still defend it because that's, he likes to defend stuff. But we'll have to see. We'll have to see. Time is running out, and they do have to get it through the Parliament. So we could be in for a surprise. I hope Poilievre is right on that one, because I did not like that capital gains tax. 9 says, I bought QQCC for a penny on Wealthsimple. It was a new position for my DFSA. You'll get, I was trying to think of what kind of the size of the dividend. The dividend will be so small. You'll have like, you'll have your penny worth, and then you'll receive like 0.00001 or something of a penny every month. That's fantastic. Yes, let's both have one. There we go. And Jersky, did I miss anything getting here late? Nah, we missed some of the news, mostly mineral stuff. A lot of mineral stuff you missed, Jersky. Oh, and I'll remind you guys as we're about an hour in. If you guys want that extra market close on Friday, we're looking for 4 supers of any kind, any amount, doesn't matter. That option is definitely there for you all. All right, and Mary is in the house again to say, hit that like button, kids. Absolutely, slam the like button. It lets the algorithm know that we're all here, and it will push it. It pushes the chat out to other people because we want to get more people into the system because once we get to 4,000 subs, we're going to do that one special open to close. It's going to be fun. I'm already starting to sort of pre-plan it in my head because we're not that far away. I think, what are we at? I think we're at 3640 right now. So we're getting there. We're definitely getting there. All right. Our next news story. Boop-a-doop-a-doo. All right. We have the power. Now, here's the funny thing. I was kind of going for He-Man vibes with this one. So, get the sword, the whole I have the power thing and lightning and all of that fun stuff. But I wanted it to be distinctively Canadians, hence the beaver. So, yeah, fun. All right. Woo. All right. Let's pull this up here. So we had a federal report come out this week all about, well, guess what? Power. So right now, if we want to meet the growing demand for electricity, we pretty much have to double our current electricity supply over the next 26 years. Wow. Now, much of the power that we're looking at and that we need is going to be driven by EV adoption and the production of renewable energy to meet all of our net zero, goals. Yep, that's going to be fun. So energy use, it's also, of course, going to increase as our population increases. And as you know, we've had immigration going on overdrive. So we're adding a lot of people. That's a lot more electricity use. Now, our actual population right now, it is expected to jump from 41 million to 50 million. So by the time we get to 2050, we should be around 50 million people. So that's a lot. That's definitely a lot. Now, an electricity shortage, what that's going to mean is higher electricity prices. It's also going to mean outages and boosting the supply. Well, unfortunately, boosting our supply, it is not an easy feat. So part of it is the size of Canada. I mean, it's a big country. So that's kind of a bit of an issue. It does make expanding the grid costly and kind of on the hard side, on the technical side. So, and the other thing too is that it's not even really a federal regulated, because most electricity is provincial. And a lot of the provinces have their own approach to energy policy and grid management. So that's kind of one of these things that we have to look at. Now, some provinces are already kind of getting an up on it. So Quebec's planning to put 185 billion into expanding its grid. BC said they're planning to spend some more, and Ontario is investing in, they're investing in nuclear and signing other renewable power deals as well. So, as I've been saying, bullish on nuclear, and I think we're going to see a lot more of that in Canada for sure. So just something to keep in mind. All right. Jersky says, listening to this seeding canola today. Oh, fun. Seeding canola. Kids, that is a good one. All right. Bruce says, hello. I opened a National Bank direct brokerage account based on the no trading fees when I watched you buy a stock last week or so. And I noticed NBDB has a fully paid securities lending program. Yes, they do. You can actually, you can do leverage and everything within NB, National Bank Direct Brokerage. I don't know what their screening is on that. I haven't signed up for it yet, but I imagine you probably have to have like good credit and all of that fun stuff to get access to it, just as you would any other type of lending program. But yeah, I do. I mean, I've the biggest reason for me using National Bank Direct Brokerage is that they have the better desktop situation. I can maneuver through it really fast. I can do things really fast, especially when I'm doing trading, and it's very easy to use. I mean, I do love Wealthsimple, and I think Wealthsimple is a fantastic. I think if you're not doing anything other than just sort of like buying and forgetting, Wealthsimple is probably your best bet right out, right away. But Wealthsimple needs to fix their desktop application. They need to make it better, more robust. If they were to make it really, really good, then I would consider moving back. So just one of those things to keep in mind. Let's see. Cash ETFs can be tricky in a TFSA. You have to wait 30 days after you buy it to sell for cash. That's kind of an interesting thought. That is actually a very interesting thought. So yeah, technically, yeah. But here's the thing though. So when you look at a cash ETF, it depends on how you're doing it because you're not really putting it in there to make money. So you're not really getting market gains on it because the price stays pretty consistent. So for example, I bought in at 10.04, and a lot of the stuff I sold it at about 10, at 50.04. A lot of the stuff when I sold it, it was like maybe 50.10. So, we're talking pennies. But I mean, technically, if you're selling it, then you might want to. So maybe, I mean, I look at it this way. I'm not going to worry about it. I'm just going to do it. Worst case scenario, the CRA looks at it and says, hey, let's talk about that cash ETF. You owe us a few pennies in tax. That could happen. Or, I mean, if you really want to stay completely off their radar, you could always do a thing where you work with a couple of different cash ETFs. Because the whole idea with a cash ETF is that at least you're getting some dividends from it. And when you're looking at the rules against day trading and such within your TFSA, they're looking at capital gains. They're not looking at the dividends, to be honest. So I think it's safe. But like I said, if you want to be 100%, then you could always like sort of maybe pick up 2 or 3 different ones and just move them between. Just that way there you're sort of you're not you buy one, then you sell it, and then you don't buy another one for 30 days. You go to a different one. That you could do. Absolutely. Marco says, all big 6 banks should offer free trading by now. $9.99 is a bit steep. Yeah, absolutely. Yeah, I mean, right now it's only National Bank. Now, I know a lot of them will offer you commission-free trading on ETFs. So, and that's, I mean, you take it this way. A lot of people who come into investing, there's a lot of people that's all they buy. They just buy ETFs. They buy it and forget it. Like they buy their VDY or whatever. And those people, the other ones are fine. They're probably fine for them. Let's see. It takes a full day for transfers from Canada to the US accounts. It depends on. It depends. Trying to think. Yeah. I'd have to do a transfer again. Because here's what happens for me. So when I went in to buy the ETF in the US account on my National Bank, I had no money in there. I just bought it. And it put me at a negative balance. And then I just transferred the money to cover the balance over. So I don't know how quickly they received it. I'd have to look, Bruce. I'm not 100% sure. What do you mean you have to wait 30 days? Okay, so in a TFSA, if you're if you sell an asset, so let's not even talk cash ETFs for this moment. So let's say, for example, Canoe. So let's say I bought my Canoe at 12 something, and I noticed it's up to like $14. I'm like, oh my God, I'm going to take that profit. So I do. And then tomorrow Canoe crashes. I can't buy that back in my TFSA, because if I do, it's kind of like once you sell something, you can't buy it for 30 days. You can, but if you do, that's considered it's considered day trading within your TFSA. So you need to wait 30 days to buy it back. So if I did that with Canoe, I would have to wait 30 days to buy Canoe back. If I were to do that, I'm not going to do that with Canoe, and I don't think Canoe is going to crash, but that's the 30 days that we're talking about. So what you can do, so if you're taking profits in your TFSA, so let's say, for example, I wanted to take that profits on Canoe, I could take the profits, no problem. But I've got two choices. I can let that money sit there for 30 days and then buy Canoe back, or I could buy something else, and wait 30 days, then sell that something else, then buy my Canoe back. And that way there, I'm not violating any rules. So just kind of an interesting thing. I meant wait 30 days for the CRA to audit in a TFSA. Yeah, and like I said, too, and here's the thing, too. If you're not breaking rules in your TFSA and you've got like a cash thing, they're not going to bust you down on that. They're really not. That's not what their algorithm is looking for. What they're looking for is some of these people who are doing some really serious day trading moves. So, for example, they caught there's somebody in the news. So it was it a year ago? It was either anywhere from 6 months to a year ago. And this guy had grown massive amount in his TFSA, basically doing trading. And they caught him, and he was like, he had something like, I thought he had his TFSA up around 200,000 or something like that. They came in, they said, yeah, all of this is day trading. Here's your tax bill. That's basically what they did. So, kind of an interesting thing. So yeah, you can't day trade in your TFSA. So 30 days. And honestly myself, I would wait 31 days just because you just don't want to take that chance. But it's okay to take, it's okay to rebalance in your TFSA. It's okay to take profits and just move it to something else in your TFSA. All of that is fine. Now, there's a few things you don't want to do in your TFSA. You don't want to be doing fast selling of the same object. So within that 31 days, you also don't want to be tax loss harvesting. I've heard of people that said, I want to tax loss harvest in my TFSA. And I'm like, no, it doesn't work that way because you don't have taxes in your TFSA. So just something to keep in mind. Is that a thing? Didn't know that. No, it is a thing. It is a thing. So because they're looking at your activity, right? If your activity is to make money, as in as in business activity, then they're going to say, oh, well, that violates the TFSA. We want the money on those, on that. So it will happen, if the chances are, though, here's the big thing. One, they have to audit you and see that it's happened. And they've got algorithms that do it. They have AI that does it probably. Well, I don't know if they're up to AI yet on the Canadian government, but that look, and they're not looking for pennies. They're looking for people who are doing it, and making more than a couple pennies because they did something like that. So you're fine. You're absolutely fine. All right. NBDB, DRIP, and DPP feature I have. All right. So NDB, DRIP, and DPP feature, I have to call them for every stock holding to enable it. See, I didn't even know that they had a DRIP feature, Bruce. Yeah, sometimes I find with National Bank, there are things that you do have to call. So they should probably add that into our system, which would be fantastic. So here's a funny thing, though. What was I going to say? I don't know what the funny thing is. Oh, right. The funny thing is, for myself, I because I do kind of my own version of a passive rebalancing. So I like to take, so for example, let's say Canoe. I'll use them as an example. Canoe, because I have multiple stocks in it, I will let myself get as high as 10% in Canoe, but no higher. So right now I'm sitting at 10%. So I don't want to put those dividends back into Canoe under any circumstance because for my diversification. So what I'm going to do is I'm going to let those dividends go into things that, for example, maybe I only have diversified dividend. I don't have. I have maybe 1.5%, something like that. So I'll put them into something like that. So I tend to want to control my own dividends. That way it's part of just my way of passive diversification. Now, some people love, of course, they're like, I just love the drip. I love the drip. That's my goal, to get a drip on everything. And that's fine. That's perfectly fine. It just comes down to personal preference. All right. DSDV says, yeah, the main thing is I don't want to be on the audit radar. Okay, fair enough. Fair enough. And that's a very valid point because, chances are you're probably fine. But, if you really don't want to be on the audit radar, like maybe you got reasons that you're really worried about that, then definitely sort of avoid that. Let's see here. Marco says, sorry, did you mean for tax loss harvesting or just buying or selling within a TFSA? No. So tax loss harvesting, that is not a TFSA item. So I was just mentioning that you don't do tax loss harvesting in a TFSA because it's all tax-free. It doesn't count. So you take a loss in a TFSA, it's just gone. It's not, you can't apply it against capital gains outside of your TFSA or anything like that. It's just gone. Simple as that. All right. Marco says, I know about the tax loss harvesting thing. Okay, awesome. All right, I'm just going to jump ahead a tiny bit here because we got ourselves a super chat. I think it's a super chat. Yeah, absolutely. Here we go. Holy banana bread. It's a big one. Day trading refers to the buying and selling of stocks over an extremely short time frame. A day trader will rarely hold a position overnight, and this holding period can be as short as a few minutes or even a few seconds. Yeah, absolutely. That is 100% true. But within the terms of the TFSA, they look at it as if you're doing it within 30 minutes. So even though technically it's not day trading, they just kind of use that as a catch-all in that. Technically, you're swing trading if you're doing it longer than that. But yeah, so anyway, Amazon Alexa, I better not trigger you. Thank you very much for that $20 super chat. That is absolutely fantastic. So we're now 3 away from that Friday bonus show. So that's kind of cool. All right, now where was I? Because I did jump ahead to acknowledge Alexa. All right. Okay, Marco says, oh, okay, never mind. I thought you meant buying or selling the same thing inside your TFSA when 30 days will get you flagged. It's not that it'll get you flagged. It can get you flagged. If you buy it and you sell it, let's say you buy it today, you sell it tomorrow, fine. But if you buy it back again, that's what will trigger their algorithm. So you don't want to do that. So you can buy something, and let's say you buy it today, and all of a sudden news comes out tomorrow that some bad stuff about that stock, and you're like, oh God, and you decide to bail on it. You're fine. You just can't buy back into it for 30 days. Yeah, exactly. All right. Sometimes my squirrel brain makes me sell stuff within a few weeks. Hopefully that's not an issue. Not as long as you're not buying it back. It's kind of one of those situations. So, like I said, like for example, let's say you become disillusioned with, let's say you bought TD Bank, and you're like, oh man, it's down. I don't have any faith in them. I would rather have BNS. So you sell it and then you buy the BNS. You're fine. You're perfectly fine. Even if you only had held TD Bank for a day. Or even if you only held them for an hour and then you found out about the laundering stuff and you're like, oh, so you're fine. Gus says, did anyone ever over contribute to their TFSA? I know I've done that for just about $100. Yikes. Yeah. So if you over contribute, they're going to charge you 1% a month, not of your whole TFSA, but only of what you over contributed. So like if you put in an extra $100, they'll charge you 1% a month of that. So that's basically $1 a month. It's not a lot, but it's just something to be aware of, because they will definitely do that. All right. And Marco says, I don't think I trust the government's AI software. I know. I know. Yeah, absolutely. Massive donation. It's not the biggest, but it's pretty much up there. I think we had, oh, I was going to say 0 to 100. It was on when I did the Hot Ones challenge, I think we had a $28 one on that one. I think that's the biggest. And that was that was actually from Tim Danter, as he was excessively amused watching me suffer as I was getting hit with hot sauce. So yeah, that'll do it, right? Marco says most brokerages have drips. You just have to call to add it. Same with TD. Yeah, I assume that. For me, I would rather have I would just rather have an option. Like if I want to drip something, I would rather just have something I can click on to say, yep, let's drip it. But nope, not in this case. All right. How about buying and selling every couple of days? As long as you're not buying the same stuff. So if you're doing a lot of buying and selling in there, well, one, I would ask why, because here's the first question. When you look at investing is it's like a bar of soap, right? The more you handle a stock, the smaller it can get. So yeah, I mean, if you're really wanting to do trading, if you really want to start making money with trading, set aside some money in a personal account, pay the taxes, all of that fun stuff. But if you're inside of your TFSA, you can get away with a lot. You just don't want to get flagged for the day trading part. So they're usually going to leave you alone as long as you're not buying back that same security. So, if you're selling stock X, don't buy it back in 30 days. If you do, yeah, you're creating that likelihood. And you may not. I mean, you may do it and get away with it, but you never know. It really depends on that algorithm. And as AI comes into the game, they may get a little more stringent on it. They may catch the smaller ones, because right now they're more or less looking for people who are doing it more on a serious nature. But keep in mind, there is random audits within the CRA. So if you happen to get randomly selected, and then they see a couple of these small things in it, they might ask a couple questions about it. But once again, it's not like if you're caught day trading in your TFSA, they're not going to send you to jail for it. They're just going to tax you. You're going to pay the taxes. Now, if there's probably a way you could end up going to jail, but you probably would have to somehow find a way to take it from just paying the taxes to turn it into something that's more fraud related. And I can't think of a scenario where that would happen. Jersky says, how do you know your TFSA limit if you are maxed and you sold a few stocks over the years with gains? You go to your CRA website. So after you have submitted your taxes, so for this year, and after they've done the assessment, then they should update that amount on there. Now, the amount they're going to put on the CRA website is not your total, but it should be how much you have left. So if you go over there and it shows that you have, let's say $3,000, then that's probably the only space that you have. But yeah, sometimes you kind of lose track of it. It's very easy to have that happen, especially if you're in a situation where you have a TFSA and multiple TFSAs across, like let's say you have one in Wealthsimple, you've got one at TD. You kind of have to keep track of both of them together. So it's kind of a good idea. Otherwise, you could get in a situation where you just don't know and you have to wait. You have to wait for next year's taxes to come through. So you want to be a little bit careful with that. All right. Thank you, Jersky. Let's see. Scotia has that option. Just click each security. Nice. I like that. I'm an investor, but also a trader. Yeah, absolutely. So, I mean, I do trading as well, but I do that entirely in a personal account. So it's 100% taxed, my gains. So, because it is business income, right? Because and I know this, All right. 9 says, all my positions are in capital gain territory. So I've been putting the dividends into XEQT, XEQT, VEQT, and VFV for now. There we go. A couple of all equity and a couple of Vanguard. Nice. Key takeaway from today, relax in my TFSA. Yeah, absolutely. I mean, as long as you're following some simple rules, just don't buy back things you sell for 30 days. Or if you want to be really safe, 31 days, you're going to be fine. Now, if you come up with something else that's really, really weird, let me know. I'll certainly let you know about that. All right. Whew. We still have more news, folks. This is fantastic. All right. Our next story, license to drive. All right. So what the heck's going on with that? So Ontario currently has a huge issue, and that huge issue is car theft. So every year in Ontario, we're losing about 90,000 cars. So 90,000 cars are getting stolen. So the government is trying to think of how can we take a bite at a car crime. So they have come up with an idea. They're thinking about revoking driving licenses with a new law that would see a conviction of car theft coming with a at least a bare minimum of a 10-year driving suspension. Now, auto theft insurance claims in Ontario, they have surpassed $1 billion. So definitely huge, huge. They're up from, well, back in 2018, their losses were around 160 million. So we've gone from 160 million to 1 billion in not that long. So what's that, 6 years? So according to early data from this year, these car thefts, they're on track to be just as high, if not higher this year. So, it's kind of an interesting thing. Now, here's the thing. When I read this, I was like, okay, so here we have a criminal. If he steals a car, he's going to lose his license. Okay. Do you think he's worried about losing his license because he's stealing a car? I don't see it as being a strong deterrent. If you're going to steal a car, I have a feeling you're probably okay with driving without a license. So I don't think this is going to be effective. I think this is a kind of window dressing that's not even going to work. It's kind of like putting a little it's kind of like taking a piece of loose leaf and writing on it, "Oh, I have an alarm," and then tacking it in your window and hoping that they believe it. Yeah, it's kind of like that. So I don't think it's going to work. I'm very, very, very skeptical that that this is going to have any effect at all, if anything. And maybe this is a conservative streak in me, but if you really want to make people not steal cars, increase the time, the jail time. Instead of 18 months, maybe double it. See if that makes people not willing to steal cars. Because if they're going to pay twice as long in time, maybe you need to triple it. I don't know, but it's definitely really, really interesting. All right. So anyway, I think we only have one more news story left after that one. But let's get caught up here really quickly. 9 says the CRA site can be inaccurate. So I write down my dividend withdrawal so I can add them to the next year. There we go. That absolutely makes sense. I mean, the more you keep track of your own information, the better off you'll be. And with AI getting crazy good, before long, you'll probably be able to have an AI assistant that can just track all of that for me. Well, for you, not for me. It's not like I want AI to start sending you all your bank data to me. I don't want to know. Bruce says, I think the CRA audited me this year. This past March, I logged into my CRA account and noticed a 2021-2022 request for assessment. I didn't request it, and I had to pay $288. Oh, interesting. Normally, though, they should actually send you some pretty clear documentation if they're going to audit you. So it might have just been that they did some reassessments, but that could be. Interesting. That's very interesting, Bruce. I would reach out to I would even call them and say, "Hey, what is this about?" Just that, just for the peace of mind, if anything else. Prairie says, oneself should track TFSA contributions withdrawal. CRA missed recording my first 2 months contributions received from Wealthsimple. Working with Wealthsimple to get them to have CRA update my account. Okay. There we go. It's kind of one of the problems when you're dealing with you know, you got two companies that have to talk to each other. Communication isn't always the best. Now, imagine the more companies that you have a TFS. So if you have a TFSA with Wealthsimple, and let's say you have one with, as I said before, I think I said Scotiabank in the first example, then all three have to sort of make sure that there's some communication. At least Wealthsimple and Scotiabank don't have to communicate, but still. Oh, I love this. Marco says the best anti-theft device is a manual transmission. You know what? It would stop me. It would stop me. I could not ride. I have no clue how to drive a shift to stick. Play it. I can't drive one of those. I imagine there's a lot of criminals that are the same way. Prairie says I put a club on my steering wheel most days when at work downtown. Not a bad idea. Not a bad idea. The other big way to save your car from getting stolen is drive a crappy car, a really crappy looking car that nobody wants to steal. Maybe put a couple bullet holes in the side of your car so they might be like, uh-oh, who owns that car? I don't want to be near that. So I don't know. It's kind of like, I know, like if you go out walking at night in a lot of cities, you want to wear crappy clothes. Like don't wear your best, your nice clothes. Find stuff with rips and tears and stuff that makes you almost look homeless, and they will leave you alone. You can walk wherever you want. You're fine. But if you go walking in a lot of those same places wearing nice clothes, the muggers are just lining up, taking bids on who's going to get you. It's just it's not fun. Although stick shift apparently is fun. So there we go. Yeah, exactly. I have no desire for nice cars anymore between that and parking lot door dings. Yeah, exactly. And Gus is saying CRA is always behind on updating contribution room. This is why I only rely on TDDI that shows every penny I contributed. Awesome. Yeah. So, let me backtrack then. I'll backtrack on that statement, use the CRA. If anything, I'll get good with a spreadsheet. Keep track of what you're doing. Now, you can, of course, go through and look at your past transactions. Because you can, for example, I know on Wealthsimple, you can do it. You can also go do it on National Bank. So imagine, just go in, make sure though that you turn it, put a filter on so that you're only looking at your TFSA. So you may have to do it that way. It's and the funny thing is, because they're so inaccurate, it makes me wonder how they ever even get around to billing you if you're over contribution. Because how would they know? It's funny. Prairie says first car I bought was a Ford Mustang with a stick. There we go. Yeah, put a Apple AirTag in your car to track it for the police if it gets stolen. Yeah, absolutely. Interestingly enough, I have Apple AirTags on the cats. May sound funny, but if one of them gets out and gets too far away, I can just use the Apple AirTag to get an idea of where I should be looking. Funny cat story. So the male cat, he's an outdoor cat. He lives inside, but he goes out a lot. The other night he came back, and sometimes he brings us a live gift. He's brought birds into the house. He's brought mice into the house. This time, oh yes, he bought something different. He brought a rabbit into the house. Jill opened the door for him, and he just ran in with a rabbit. So she screamed. I came downstairs to find out what was going on, and I'm going to hunt for this mouse. So I pull out where the cats are all hunched around. I pull out the kitty litter because, the rabbit went in behind there, and it was a little rabbit. And I was like, what the hell? That's a rabbit. Wasn't able to catch the rabbit. The rabbit made it to the basement. Now, the basement has a lot of storage stuff. There's so many places this rabbit can hide. So there's a rabbit living in my basement right now. I don't know how to get it out. Jill's left food down there for the rabbit, but it's just like, seriously, I now have a pet rabbit. So and here's the funny thing, even if I can find the rabbit, these things, like this rabbit moved really fast when I saw it the first time. So I don't know if I could even catch it. It's almost like I'm going to have to get like some kind of a box with a little door on it with a string or something so that the rabbit goes through and then the door closes. I don't know how I'm going to catch this rabbit. If any of you guys have had to catch a rabbit in your basement, let me know. Because this for me is a brand new territory when it comes to animals. Marco says, I wanted a stick shift Mustang, wasn't allowed to buy it, settled for a Z24. Good times. There we go. Let's see. Whoops. Probably because I was still in high school and probably would have gotten in trouble with a 5-liter V8 car. Maybe. Yeah, definitely. You gotta love that. All right. We got more news. Here. All right. Premium theaters. So gotta love some of the premium services. So this summer, analysts are predicting the summer's box office to be 25% less than average. And we're talking pre-pandemic average. So we're really expecting a bad summer. There's a couple of good movies. I mean, Deadpool 3 or Deadpool and Wolverine, that's coming out. That looks like it could be interesting. But they're expecting a pretty bad summer. And, one of the ways they're going to combat that is, they're going to start offering more premium stuff, more premium services. So let's see. So basically, you take Cineplex, their overall goal is to double down on their premium services and see if they can get people back into their movie houses. Get them off the sofa. Come on back in. Now, this goes without saying. They've actually been doing well on their premium services. So Cineplex, 41% of their box office draw last quarter, came from IMAX, VIP, Ultra AVX, and 3D screens. And that's kind of interesting. I do like the VIP. It's nice to have space and it's nice to, it's just so comfortable. But that's one of the things. They're also looking towards international films too, because they've been making more money on international films than they normally do. So historically, international films make up about 3% of their overall take. Last quarter, they were up to 13%. So that's kind of huge. They're also looking at live events. So a lot more live events. So they did a concert film, the Taylor Swift, the Eras Tour, and it absolutely broke their records for pre-sale ticket purchases. Now, that just might be because it was Taylor Swift. People seem to be gaga for Swift. I kind of mixed artists, but that's fine. But, it's kind of an interesting thing. Do they want to just start premium up things and try to get people to come in that way? We have to sort of see. It's kind of interesting. What are you guys' thoughts? Are you guys even going to the movies anymore? I know lately, even movies I've wanted to see, we've kind of skipped them and we're just like, oh yeah, well, do I want to go see it or do I want to just wait 5 months and watch it on one of the streaming services? And so far, most of them I've been saying, well, we'll go 5 months. Why not? Okay, Jill is saying there's no longer food down there. The basement door is open. So it could come up and drink from the many water fountains, assuming it's alive. Dangerous territory to come upstairs with 3 cats. Dangerous territories. And yes, there was a GameStop rally. Yeah, Curious Kitty. Sorry. I can't even remember his name anymore. Kitty Roar. Yeah, Kitty. I was going to say, I don't know why I say I'm curious, but Roaring Kitty. Roaring Kitty came back. Now, Roaring Kitty was he was responsible for part of that Wall Street bets thing that happened during the pandemic. So now that he's back, we'll have to sort of see how that's all going to boil down. But we looked at it on the market close. We actually did look at it, and pretty much if you weren't on it at the beginning and sold right away after it exploded, you pretty much lost money. So a lot of people lost money on that. Let's see. Marco says they should start making good movies again. Yeah. There have been a lot of misses, but yeah, I don't want to get into an argument on, or I don't even want to get into a discussion on the quality of movies these days. We'll just leave that be. And yeah, the VIP is pretty darn sweet. Yeah, once you've gotten used to it and spoiled, it's like, yeah, it is kind of the only way you want to go. All right. Problem is, police don't do anything. Too much paperwork. You need search warrants. Yeah, absolutely. It's kind of one of those big issues. Like a lot of times, especially if you get charged with something minor, like let's say you get charged with shoplifting and you go to court for it, there's probably a good chance that the police aren't even going to show up, and then they're going to throw it out. That tends to be what happens. So we got a little bit of a revolving door. It's sad, but it's kind of the truth to the way the legal system works. Not that I'm telling you guys to go out and shoplift and, and say, come on, you said I had a 50-50 chance. Well, yeah, you just ended up on the wrong side of the 50. I just want to put that out there. So don't do it. Don't do it. Prairie says, theaters are losing money with me, daughter. Theaters are losing money with me. Daughter and I went to see Planet of the Apes yesterday and paid both tickets with my Scene Plus points. Yeah, there we go. There we go. Nothing like that. And I did hear that, I actually heard that Planet of the Apes was not so bad. So that's kind of a good thing. Bruce says, I think that a maxed out TFSA is very limiting in a down market. I'm a movie buff, but past few years I went 4 times. Yeah, exactly. Roaring Kitty. Yeah, when it comes to the movies, there's a few movies that I will go out and see at the theater no matter what. But for the most part, like for example, Deadpool and Wolverine, I'll probably see that at the theater. Because I mean, the trailers look fantastic, and I like that offbeat humor. I think it'll work. I think if anything, it'll be the first good movie that Marvel has. The first movie I think in a while that should break the $1 billion mark worldwide for Marvel. 9. I haven't been to a movie theater in a decade. Plus, they never sell banana bread snacks. What's up with that? Why not? You could always just bring your own banana bread snacks with you. But still, yeah, Deadpool does look pretty darn good. How is Cineplex stock doing? It's a good question. It's a really good question. I'm not sure. You know what? Here, let me do one thing here really fast. All right, Crypto Corner. All right, I got one story in the Crypto Corner. We'll just get that out of the way, and then I can pull up the large screen and we can go take a look at Cineplex. So Dogecoin. My one story is about Dogecoin. So this coin, it's a meme coin, but it's actually outperforming Bitcoin this year. It's up 55% year to date. Now, mind you, once Bitcoin recovers and gets back up towards 70,000, I think it will surpass it. But right now, it's been doing really, really good. And for those of you who are into technical analysis, it's on the verge of hitting a golden cross, which basically it just means that the asset's short-term gains are eclipsing its long-term gains. And that tends to signal sustained growth and, of course, a potential bull period. So, it's looking interesting for a good old Dogecoin. And interestingly enough, Dogecoin has a market cap now of over $20 billion. It makes it one of the 10 most valuable cryptocurrencies in the world. Who would have figured? Well, I mean, there are some places that do accept Dogecoin. you know, I'm just saying. I'm just saying. Oh God. Dogecoin. It's a coin that we all love to hate for sure. All right. Now I can. There we go. I can get rid of. Whoops. Let's get rid of that. Let's get rid of that. And all right, give me a second. I'm going to pull up a chart here. I just have to open up our. All right, here we go. All right, just do that here. All right, let's pull this up. Share. Perfect. We'll move me down to the, whoops, come on, let's put me down there. All right, there we go. Now we can look and see how Cineplex is doing. I have a feeling that they're not doing super hot, but let's find out. We'll just go over to TMX Money. Oops. All right, Cineplex, come on. Let's see. No. All right, EP. There we go, Cineplex. Ba-ba-da-ba-ba. All right, so let's take a look here. We'll look at their last year. All right, so yeah, for the most part, they've been kind of heading down. They got a few big bumps in here. They got another big bump here, but they've moved down a bit from there. So it's going to be interesting to say how they're going to do. One of the problems with the summer too is like last summer, they had, well, look at this big bump here. Let's go back further. I'm going to go back even further here. 3 years. No, I guess you can't really see because it's kind of like in here, but this is that last summer right in here, coming into here. So all in here, they had some good times last summer because of Barbie and Oppenheimer. So that whole Barbenheimer thing really, 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 really helped the theaters big time. They don't have anything of that power this year. So that's going to be very interesting to sort of see how that all boils down. But if we do take a look here, I'm going to go some key data for you. All right. Let's see here. I'm looking for. All right. So they haven't even reported a return on equity. That's always concerning. But the return on the assets actually are not that bad at 7.24. I mean, I still think it's kind of interesting. This is like movie theaters. I don't have long-term confidence in movie theaters at all. I really, really don't see them as being something that we will still have in like 10 years. I think home entertainment, AI, I think it's all going to completely move it. I think we're kind of seeing a lot of stuff. Like you will still have movies will be made, but I think it's going to end up being something else. I think movie theaters really haven't changed much since they originally came, other than, of course, yes, you've gone from single movie houses to multiplexes, but I don't think they've transformed enough. So I think there's going to be a lot of changes coming up with movie theaters. So this is something that if I was thinking long-term, I probably would not do it. I probably would just leave it be, personally. All right. Let's see here. All right. Let's get me back up to big screen. There we go. Woohoo. Bismarcky, never heard of him. Who is Tyler Smith? Exactly. I like Marco's answer. Taylor Swift is the Gen Z Madonna. Pretty much. Yeah. And she kind of started off as like a mid-tier country artist initially, and then she just exploded. Let's see. Big bump for the Napoleon movie. Oh, there we go. I only watched Oppenheimer because of Cillian Murphy, great actor. It was a good movie. I watched both. I did like Oppenheimer. It's kind of funny. When I was watching Oppenheimer, whenever they get into the science, I was loving it. I was like, yeah, let's just get more into the science. Let's forget about the rest of the story. Come on. But I'm a geek that way, so I'm fine. What are your thoughts on Timber Creek Financial's bearish performance this past week? While banks other than TD have been doing well, TF reporting a good Q1. Yeah, TF has certainly slipped a little bit. I still have full faith in them, though. I've been looking at this correction as a time to add a bit more to them. So Timber Creek Financial, I think they're going to rebound. I don't know if it's a situation where they had some extra expenses. I have to look into that one particular thing to see if there's anything there. But I do have, like I said, I do have a lot of confidence. Like, let's pull it up. We got this here. We can do it. All right. We have the technology to bring up a web page. There we go. All right. I'm going to do something silly here. I'm going to pull up the 5-year. So when you look at Timber Creek Financial, actually, I'll pull up the 10-year because then you can see it a little bit better. So they've normally been up in the $9. That's kind of where they normally sit. So that to me, and you can see right here, pandemic. Look at this, bang. That is like going off a cliff. But that was a good old pandemic. Now they've almost they did make it back to that area as we moved into the bull market, and then we hit the bear market. So they have not yet recovered from this, and we have a little drop. Those drops are normal for them. Just I want to point it out. Like, look, there's one. They have them. They're normal. There's one, and then they came back up. So I think they're normal. For me, with TF, so in the challenge, I have them. So I'm looking at them. They have good dividends as well, like, what is it, 9%? Yeah, 9.8%. So they do have some good dividends, but I'm looking at total return stock. So when I put something like this into the challenge, my goal with this stock is that I'm not looking for an income portfolio in the challenge. I'm looking to grow the challenge. So once this grows back up into this area again, I'm probably going to sell. Now, if you're looking for a solid dividend stock, sure. If you're, this is not bad. It's not a bad stock at all. And I do believe it will get back up to the $9 area. So that's kind of my goal with that one. Yeah, 9 is saying they don't even pay a dividend. So yeah, Cineplex. It's one of those ones that I don't have faith in them long term. I don't. Maybe they'll have a rebound. Maybe they'll start transforming movies in the theater, something that makes people want to go back. But I see them as more situational. Like if you have a really strong slate on the summer and it looks like it's gonna, like the movie theaters are gonna just explode, well, then you might want to buy some and ride them up over the summer. All right. Yeah, so TF also reported that even after issuing a special dividend, book value per share was up. Yeah, they did offer that extra dividend. And keep in mind, when you do offer, when you offer a dividend and then you do a special dividend, this does tend to depress the price a little bit too. So that is, I forgot about that special dividend. So that is kind of important to keep in mind as well. All right. Let's see. How bullish are you guys here in the S&P 500 in the next 2 weeks? Whew, that's a good question. We're starting to move into the summer, and there's kind of 2 camps on the summer. One camp is that, sell in May and go away. There's that camp, the ones that say, okay, summers tend to be traditionally bearish or very flat. So, wait till things start to go back up again, or hopefully things crash in the summer and I'll just buy them back in the fall. But I have a feeling this year, the summer is actually going to be better than that. I'm a lot more bullish. The biggest reason is that statistically, in years when we've had an American election, the summer has done better. So the S&P has actually pulled more money, more returns than they normally would in a summer. So I'm thinking we've got that catalyst. People are going to stop freaking out about rates, about the rate hikes and the rate staying the same. People will sort of chill a little bit in the summer. They'll start to worry again in the fall if we haven't had a rate cut yet in the U.S., which we won't have had. So yeah, I'm thinking the summer's going to be half decent on the S&P 500. I'm not saying that we're going to the moon, but I think that we'll probably see more green days than red days over the summer. All right. Marco says, the scene that freaked me out the most is where Oppenheimer and Einstein discuss whether or not the chain reaction would stop or set fire to the entire atmosphere. Yeah, that was absolutely accurate. So a lot of the computer models that they had running at that time, a lot of the predictions were that the hydrogen could start a chain reaction with the hydrogen in the atmosphere, in which case you would have basically a nuclear explosion that would expand around the entire planet. That was it wasn't like a big chance. It wasn't like a 50-50 where they're like, well, let's do it anyway. It was a small chance. It was I think it was like probably like less than 1% chance, but it was still something that they were concerned about. So, but yeah, that was definitely kind of scary. Gus says, theaters are a dying business. I agree. I won't put a penny into it, and I won't invest in hotels and airlines and cruises because they're extremely sensitive businesses to political, health, environmental issues. Yeah, absolutely. I mean, there's no need, like airline wise. One of the big issues with airlines is that why would you fly for business meetings anymore? Like, why? We're at a point where the Zooming is fine. And when you look at some of the capabilities of things like the Apple Vision Pro, you could have a virtual meeting and it would almost be like you're really there with them anyway. And it's going to be interesting as things like that roll out. Maybe it's, whether it be the Vision Pro or maybe somebody else comes out with something better, who knows? But I think that's going to certainly happen. All right. 9 says S&P is a ultra long hold for me and also for Enid. Let's see. I bought some Air Canada after the 20% drop. You know what? It's fine. I mean, people will still use the airlines. People are still going to travel. They're still going to have, people want to go on vacation. People want to visit family, things like that. It's, there will become a new more normal. And there are still people who are like, we're still traveling for business. Some people will be kind of, we're not 100% there yet, but I can see it coming. Like, I mean, look at it this way. Why spend the money to fly employees to have a meeting when you can do it virtually and get the exact same thing accomplished, while at the same time you save money, you save time, and you save the environment? All of them. That's like it's like a perfect triage. So I think I think airlines, we're gonna, they're not gonna go out of business, but they're gonna have to redefine themselves. All right. And Bombardier. Yeah, they've done really well. Okay, Marco says, there will always be a need for air travel. I just wish it was a bit nicer. Airports and some planes are filthy. Yes. And, and apparently if you're taking a Boeing, doors are optional. Oh, that's fantastic. All right. Now, I do have a couple more things here. So, coming up this week, we need to sort of mention this. We got a couple things in Canada. Tuesday, mark it on your calendars, folks. It is our CPI. So the Canadian CPI will drop on Tuesday, May 21st. That will be interesting. If it's down, maybe. This is the one I'm thinking. If it is down, we could see that June come back. I'm still kind of like, I know I've said I'm moving to July, but oh my God, it's hard to move to July when part of I'm still kind of 50-50. This is going to tell me from this CPI. I think I'll be able to call it, but I need to see what this is going to be. Friday, we got retail data coming out. So that's going to be interesting to see if that continues to fall. Now, obviously, if our retail data is down and our CPI shows inflation down more, that could be really good. That could be really, really good. That could be really good for June. So we'll have to sort of see with that. In the US, the only real catalyst this week is on Wednesday, and that's when they read the minutes from the May Fed meeting. So Sometimes there's something written in the minutes that kind of freaks people out. So, but I think for the most part, it shouldn't be. It should be mostly a non-event. And earnings wise this week, it begins. We get TD earnings coming out this week. The following week, we'll see the rest of the banks. And then, of course, that means I will be doing my bank summary video. So that will be all coming out pretty darn soon. So, yeah. So we'll get to see the first one, TD, and maybe we'll see a little bit of if there's been any kind of impact on those financials, on the fundamentals from all the money laundering stuff. I don't think we'll see much. If we see any kind of an impact, it'll probably be the next quarter. But yeah, there we go. That's the news. All right, so now we got you guys. So as we're heading towards the end, we did have that one really nice super chat earlier. But if you guys do want the Friday, we need to see 3 more. Otherwise, we'll still get the Wednesday, and it'll be fun. And maybe Wednesday, if you guys bend my arm enough, we might give you another chance if we don't pull it off here today. DSDV says, I find any individual stock too risky for my taste. I like index funds and funds like Canoe. Fair enough. And keep in mind, when I talk about my diversification strategy, so I limit individual stocks at 5% of my portfolio. So nobody gets more than 5%. But if there is stock that invests in other companies or other, things like Canoe, for example, they can get 10%. BAM also can have 10% because they invest in assets. So that's kind of the way I hold it. So I do limit any individual stock for that very reason. But if your limit is 0, that's fine. It really comes down to what you're most comfortable with. And some people love just saying, hey, I've got this beautiful basket. I just have to sort of sprinkle my money over the basket and I'm doing fine. So that's cool. All right. Let's see. Marco says most of my holdings are global index and some picks for fun and dividends. Okay, fair enough. And some people will do that. So as I've been talking before, the whole hold forever, like your circle your wagon stocks. So those are the stocks that are the ones you just want to hold on to forever. So sometimes what you'll do is you'll create your core portfolio from these circle the wagon, hold forever stocks. And then you may have say, okay, well, that's about 60% of my portfolio. I'll play with the other 40%. Maybe, try different things, try to make some money this way and that way. And it really comes down to what you want. Or some people are like, I just want the circle the wagon. Why do I even want to go outside of that? And that's perfectly fine too. There's no right or wrong way to invest. To a certain extent, if you're buying high and selling low, then you're not doing it right. But when it comes to just your strategy and setting things up, there's a lot of things that you can certainly do. Red Water says the Liberals may be buying more share in Air Canada. Well, they might, absolutely. I think Air Canada is at a price point that I think long term you will make money from them. But, if you expect it to get back to where it was pre-pandemic, you'll have a very long wait. It's not going to get there anytime soon. Considering as well, there was quite a bit of dilution. It's almost, I don't want to say it's impossible, but it will be a very long trek. Prairie says, doors, bolts, and wheels apparently are optional. Yeah, those good old Boeing. Yeah, even the Boeing spaceship didn't make it off the ground. So Marco says, I have too much in Scotiabank. Need to sell some near $70. Okay, fair enough. It never hurts to take profits. It never hurts. Gus says, I hope we see some raises from the banks. I know BNS is due for one, even though their payout is a bit higher. We'll have to see. I have a feeling this time around we may see some dividend hikes. TD will set the stage. And I have a feeling that if they hike, we'll probably see hikes from some of the others as well. Jill, she's for the people. Oh, come on. It was $20. That would be good enough for a Friday market close. It's all right. Here's the thing. All right. I will knock it back down to the 3. I will, there we go. So if we get 2 more before the end, even if they're 2 $1 ones, we'll do the Friday. Because that was a nice one. That was a really nice one. I gotta say, I love the A person. I can't say their name the whole way because then we'll get her up there listening. She's probably already listening anyway. Bismarck, he says, Canoe says they will be issuing a press release end of the month. Any idea what it's about? I'm wondering if it's about their premium fund. So I know that they are looking, and I thought that this is around the right time. So they're actually looking to create a premium Canoe fund. They're going to convert one of their other funds. They're not converting Canoe EIT. That's staying exactly as it is. I know when the first news of it inked out, people were like, yeah, they're changing Canoe. I'm like, no, they're not changing Canoe, but they're coming up with a new fund. I don't know if they're planning to use covered calls or something. They might be because it's a premium fund. So we'll have to see. I can't wait. Hopefully we get some information on this new fund because it could be very interesting. Marco says, do you guys hold ETFs in a taxable account? Is it a pain for tax reporting? Example, adjusted cost base. I use mutual funds in my taxable to avoid this headache. So yeah, if you're holding ETFs in a taxable account, it can be a headache because you have to look at what they're holding. So are they only holding eligible dividend stocks or ineligible dividend stocks? So sometimes you have to break that apart. So I usually recommend when you have ETFs that are paying dividends, throw them in a registered account, save yourself the headache. Or if not, make sure you know what type. So for example, if you have like a Big Six Canadian bank ETF, all of the dividends in that are going to be eligible dividends so that they are all going to get the tax credits. So that would be the type of thing I would put into a personal account if I had to, just to sort of keep in mind. All right. And Prairie says, do you put a cap on your 5%? So on $2, $3 is different than 5% on. Okay. So the way I put it is that the $5 is based on the 5% is 5% of my total portfolio value. So it's always moving. So when a stock does really well, it moves up, and sometimes it can push itself above the 5%. Now, I will usually, most cases, if it's over a little bit, I'm not too concerned. So I'm probably not going to rebalance it. But if it gets over big time, then I might consider that. Most of the times what I'm doing is like, so for Canoe, when they get over, like I said, their dividends are not going back into Canoe. They're going into others. All right. And Marco says, I have some Boeing shares too, going to dump after this news. All right, here we go. It's begun. Marco has thrown in a $3 super sticker. Let's do it. He wants a Friday. Thank you very much, Marco. And here we go. I said 3. I moved it to 3. And Mary is like, yeah, we're doing it. Here we go. We got a super sticker. I need to see what the super sticker is. I got to go over to my other screen so I can see what this is. Behind the scenes. Nice. Awesome. 9's in with banana bread donations. And Marco says, I use TD E-Series mutual funds in my taxable accounts. They take care of everything. A bit higher MER, but not bad, around 0.3%. Yeah, absolutely. And like I said, it boils down to, like, some people get all obsessed. Like, oh my God, there's a management fee. Oops. I probably should. There we go. I thought I forgot that I wasn't on Big Head me. There we go. All right. And Mary, thank you so much. Here she comes in with another one. Look at this. It's the yellow head with the heart eyes. Fantastic. $6.99 super sticker. And keep in mind, guys, these all go into that 0 to 100K. So that is all super fantastic. So we did get the 4. Even though I knocked it back to 3, we got the 4. We're doing a market close on Friday and Wednesday. So 50% of the week. Well, it's a short week. So there we go. Love it. Thank you very much, Mary. And hey, Mary always tells you guys to hit the like button. She's just, she helped. She big time helped you guys get an extra market close. So you have to hit the like button now. You have to hit it. You got no choice. All right. Terry says, I would adore increased Devi rates from BNS and TD. Did I hear you folks correct? They have been the problem. See, here's the thing with the banks. Around the time of the pandemic, they were under orders not to increase their dividends. So they went for a little bit of time where they weren't increasing dividends. Now that they're allowed to, they've been sort of pushing them out every year, and they've been, it's going to happen. I have a good feeling. Let's see. Stream Inception. Fun discussion. All enjoy the rest of the long weekend. Cheers. Yeah, we're coming up on the end, folks. We are coming up on the end. I know. Bismarcky says, thanks, Mary. And Mario's in the house. Hey, Mario says, thanks, Mary, as well. All right. If you guys got your last minute questions, drop them in. And we're going to go over to Discord. While you guys are doing that, oh gosh, I hate it when it's double me. Let's come back over here. There we go. Discord. And here is our schedule for this week. So I am excited once again. I told you guys earlier in the stream. So tomorrow for the channel members, Tuesday for everybody else, we got 5 total return superstars you don't know about. And I have a feeling if any of you know about all 5 of these stocks, let me know in the comments once you've watched the video, because I will be impressed. I will be absolutely impressed, because I will admit I did not know of all of these companies. I knew a few. I knew there's one I knew because I've had it on a list before, and then there's another one I know of. But I think 3 of them are fairly new to me. I don't recall ever running into them before. So this is going to be a lot of fun. And look at this. Watch this, guys. All right. We're going to come in here. All right. Boop-a-doo. All right. We'll just come in here. Option enter. Command V. And Friday is the 24th. There we go. And it is bonus. There we go. We got it on the schedule now. So there we go. You guys have earned that. You guys all rock. So we got Mary absolutely rocking. We got Marco absolutely rocking. And we got Amazon Alexa also. Hey, don't listen to me, Alexa. Also completely rocking. So yeah, absolutely. I have a feeling you guys are rock. You guys are rocking. You guys are awesome. Anyway, I'll just leave that be. 9 says, let me just get rid of the schedule. I will be putting out the deep dive questions. Probably I'll put it out tomorrow. So we're doing an ETF. We're back to the ETFs this time around. So we're going to do an ETF deep dive next Thursday. So it's going to be a lot of fun. I can't wait. All right. Now, also coming up, I don't have it here yet. I don't have it scheduled. I am looking, I know I've had a couple requests to do an RESP video, just what it is, how it works, that type of thing. So that is going to be coming up fairly soon. And I'm also thinking about a retirement video on an income portfolio. So an income retirement portfolio, that's coming up. My gosh. Yeah, we got a lot of great stuff coming up over the summer. So even if the market slows, I don't think it's gonna, but if it does, we don't slow here. We keep on going. It's going to be a fantastic summer. So you guys are in for a fun ride. All right, let's get rid of that. Boom. Bringing us all back up. Who y'all cheering for in Game 7? Canucks and Oilers? I'm going for the Oilers. There we go. Marco is going for the Oilers. Terry's arm tastes really salty. Holy banana. Terry, don't eat your arm. Or maybe you're just licking your arm. I don't even want to know what you're doing, but I'm also kind of curious at the same time, but we'll leave it be. Maybe you can look at the ETF HEB or HCA in another live stream. Yes, I can. Well, we're here. We are here. Let's take a very quick gander here. All right, HEB. All right, so this here is one of the Hamiltons. So Hamilton Canadian Bank Equal Weight Index ETF. Let's take a look here. Well, I got a fairly low distribution yield for a Hamilton, only 4.831. Is this not a covered call? Let's see, performance of yeah, this is not a covered call one. I'm impressed. Every time I hear Hamilton, I'm always thinking covered calls, but look at this. You can see right here clearly. Look at this growth that we've had. This is fantastic. So, I mean, if you had jumped in back here, 1394 to 1714. So this has had a really good run this year. You got a good decent, like this is a decent dividend. So this is a good total return ETF right now from the looks of it. I have a lot of faith in the banks coming in. So I think this is a good one, Mario. And the other one you had there was HCA. Let's take a look at that really quickly. So another Hamilton Canadian Bank Mean Reversion Index. All right, let's take a look at that. All right, Reversion Index. Let's go to the 1 year. So once again, this one's doing pretty much the exact same thing as HEB was doing. And yeah, the yield's a little higher. So this also, I'm thinking, is non-covered call because, you know, yeah, absolutely. No, these are nice. These are both, I think these are nice. I think these would both be nice to ride up. I'm looking at these and I'm thinking, I kind of like them. So I think, yeah, they're definitely doing really, really well. I think total return wise, I think you're looking at some, like if I did the math on this, you're looking at double digit total returns, easy. You know, just from here, from our down point. So yeah, I like these. I like them both. I think these are a couple of good Hamilton stocks. I mean, I like Hamilton. Oh, right, we're doing HCA. I do like Hamilton. So let's see. You missed my question earlier. If you have time, what was your question, Nine? Throw it in quickly, and I will do it. I will look at it. I can't believe I missed a question. No, I try not to miss questions. But as we get busier, that's what happens. And that's where them supers. Those supers will come into huge play when you guys want to, you know, make sure your question gets read. Right now, I do my darndest to get to them all. And yeah, H Bank is another good one. No problem. No problem. All right. Income retirement portfolio coming up. Yes, I know. You know what? I'm going to sit down with the schedule this week and I will get that penciled in. I will get that penciled in so that way there, you know, people will know when it's coming. Yeah, and like I said, I mean, I know I've got some people. I've got a good number of the community who are very much into retirement. Like that number one video on the channel, that that old age security video. This week it actually broke 21,000 people. So I'm like, whoa. So that's kind of interesting. So what's the optimal portfolio for someone planning to retire before 50? Wow, that's so you're almost thinking about a fire. So, you know, financial independence, retire early type situation. It really boils down to, like, I kind of have to have a general idea of how much, you know, how much you've been putting into your portfolio. So here's the thing. If you're planning to retire before 50, so let's say, for example, you're planning to retire at 45. So, and let's say you started when you were 20. What I would like to see in a portfolio like that is in at least the first 10 years. So from 20 to 30, maybe even to 35, a lot of heavy growth stocks really, you know, start to pump up the size of your portfolio. Beautiful thing is, especially with a TFSA, is, you know, you're growing your contribution room big time. Well, you're technically not. You're just blowing up the room inside, and that's great. So you want to grow, and as you get once you get to 35, a lot of times, and even then, a lot of the growth stocks nowadays are total return stocks anyway. You want to start looking at just maximizing returns, getting things as big as possible. All right. Now, once you're getting closer to retirement, so let's say, once again, if you're retiring at 45, then you have to sort of look and see, what kind of income do I have? Because obviously between 45 and at the earliest 60, there's nothing there. There's no government supports. You don't got a CPP. You don't got an OAS, or, you got nothing. So you got to look at what is going to pay. So if at that point you're planning to live off of that portfolio, you have to sort of decide, well, okay, how am I going to live off of that? I got a couple of options. I could switch it to an income portfolio and try to live off that income. Fantastic. Or, and here's the thing, and this is the rub. There's two different ways you can look at this. If you, what's the best way to sort of say it? If you go with, all right, so let's say you went with the income, then that's fine. It limits how much you're going to have in your portfolio. So if you kept it as a total return, you could still grow it even into retirement. And then what you would be doing then is, if let's say you grow a stock by 20%, you might pull 5% out of it and, use that to live, or maybe 10%, whatever it is that you need, depending on the size of your portfolio and your expenses. The downside to that, though, is if that's what you're living off of, is if we go into a bear market. Then if you go into a bear market, you may not have that extra growth. All of a sudden, things are starting to shrink a little bit. Whereas in an income portfolio, you go into that bear market and you still get the income coming. Unless they start to cut dividends, and that can happen. But for the most part, you're still going to have your income source coming. So that's kind of where you have to look at it. So you might even be in a situation where you could say, okay, well, let's ride it up as a total return. And when it looks like we're starting to head into a bear market, then we can switch it over to an income account. You could do that. It takes a lot more work to do it that way. So it's kind of that fun thing. But yeah, you kind of have to get a general idea of how much, like if you have a lot of money. So let's say you've done really, really well. I mean, you could have enough in there that you could live off of the dividends perfectly fine, or you could even have enough in there that the dividends coming off the total return stocks are enough to support you. If that would be the ideal case, right? Because then you could still get that growth, and at the same time as you're getting that growth, you could, you still get the dividends and you got that safety net at the same time. So if you have a lot of total return stocks that have higher dividends, so like the bank stocks, for example, if you're getting something like a 7% dividend off of like a Scotiabank or something like that, that's fantastic. What is it? Is it 7% now? I see. I don't even know what the dividend yield is anymore. I think it's somewhere around 7%. Let's take a look. 6.4. Even still, that's not too shabby. So just something to keep in mind. All right, let's get rid of the big screen here. Otherwise, I'll just completely forget. All right. So yes, fire soon. I'm 41. There's nothing wrong with that. But even then, I mean, excuse me, time to have a coffee. Here we go. Even with fire, if you have the money to retire at 41, you're probably still going to want to make money. You'll still probably want to have a side hustle, something to keep yourself going. Maybe you'll start a YouTube channel, and do something that you like. Like, it doesn't have to be about a finance YouTube channel. Like, let's say you retire at 41 and you start driving around the country. You could always turn that into a channel. There's a lot of travel channels like that. So, you just go to some new place and you break it down, say, hey, I'm a traveler. I'm new. What's the city got to offer? All of that fun kind of stuff. Let's see. Marco says, my portfolio spits out about 20K a year in dividends at the moment. Okay. That's not bad, but it's not livable. So you need to get that up. Oh gosh, with inflation, you probably need to, at the bare minimum, I would say at the bare minimum, you probably need to double or triple that. But it also depends on your thing. Like if you have, for example, you have a house that you've paid off. So, you no longer have a mortgage, you just have your property taxes. You might be able to whittle down how much you need. And that's the thing. You need to sort of know how much you're going to need. And, and here's the key thing. You may say, okay, well, I can live off of 30,000 a year. Well, maybe that was true. And then inflation hit. And now maybe it's 40,000. So you want to keep all of these things in mind. And then you also keep in mind too, that you can retire early. And if it doesn't work, and if you find you're going through money a little bit more than you want, there's nothing stopping you from grabbing a part-time job or something like that just to help supplement or some side hustles. All right, here's the missed question. The missed question. All right, my question was, do stock buybacks work the same in Canada as the US? Do companies in Canada get taxed on buybacks? I know in the States, Biden wants to add tax on stock buybacks. Yes, I know that. I believe Trudeau was looking at adding more tax on buybacks because he wants companies to not do that. I don't know what the percentage is, but I do know that. Well, hey, let's. You know what we can do? Let's see here. All right, this is ChatGPT. Let's see. What are the current taxes on Canadian? We'll put Canadian company buybacks. Stock. We'll put stock. We'll see if she knows what it is. But I remember there being a bit of an issue. All right. Oh, that was funny. Like this stuff up here above it is I asked her to write a monologue. I just wanted to see. I was not planning on doing a monologue, but I said, here's what I'm talking about in my my live stream. What would you suggest for a monologue? And oh gosh, it was corny. So here we are. Yeah, here's the one I was looking for. So January 1st, it's a 2% tax on stock buybacks. So that's exactly what I was thinking about. I just didn't know what the percentage was, but yeah, it's 2%. And let's see here. So the tax is calculated 2% of the fair market value of the equity repurchased by these entities within a fiscal year, provided the purchases exceed. Okay. So that's interesting. So it looks to me like if you do a buyback that doesn't bring in brings in less than $1 million, then you probably don't have to get taxed on it. But that's kind of cool. Yeah. So this here, by the way, guys, this is the new desktop app for ChatGPT. Oh, so I just got it. They just sent me a thing today saying, "Oh, you have it now." I'm like, okay, cool. All right. So now it's just a little app. I can just pull it up at any time. All right. Gus says, good luck selling in a down market. My goal is to switch to a CC portfolio and just collect the income. There we go. And that's a perfectly valid portfolio in retirement or any of that other thing. So that is fantastic. Marco says, yeah, cover calls are great. BNS is like 6.5. All right. And Jill's like, time for dinner. Dinner? What the hell's dinner? I don't know what dinner is. I know we're running a little late. You know what? We'll finish. We're about 30 seconds away from 2.5 hours. So we'll finish it in about 30 seconds, roughly 30 seconds. If it's like the last stream where I hit the end stream and it just didn't end and I was like frozen there for a bit. Oh, let's make this big because if I screw up the getting out, it's kind of funny. But anyway, you guys have been fantastic. I always enjoy these afternoons with you guys. And like I said, this week we got two live streams. So market closes. I can't wait for those. I love the market closes. All right. Until then, everybody, I will bid you a fond farewell and enjoy your day off tomorrow. Bye, everybody.